Apple, it's the world's most valuable publicly traded stock. Its iPhones and iPads are high-ticket goods that many view as necessities. And Apple is owned by millions, if not directly, then as part of a mutual fund or ETF. So why does a stock everybody seems to know defy easy categorization by investment pros and individual investors alike? Mike Santoli explains.
Apple is the world's most valuable company, but its stock just might be the market's ultimate misfit. Though Apple's market value exceeds $600 billion and it makes up more than 3% of the S&P 500 index, the stock does not behave much like a true market bellwether. Apple's stock moves tend to be independent of economic data or broad market trends. While the stock has been virtually flat the past 4 years, the S&P 500 is up 50%. Yet in a soft patch for the major indexes last week, Apple shares gained a quick 9%. Another indication of Apple's misfit status: it is a cheap value stock attached to a business that still plays by growth company rules. Many investors take comfort in Apple's modest valuation compared to the overall market, yet very few companies of Apple's size have ever been so dependent on new hit products rolled out over a punishing 2 or 3 year cycle, the way Apple rises and falls with the latest iPhone launch. Investors seem unwilling to put a higher price on each dollar of Apple's earnings without the confidence that its profitability can be maintained. Finally, Apple shares managed to be both excessively loved and somewhat neglected by Wall Street. Among the 40-plus analysts who cover the stock, more than 80% rate it a buy. Yet professional stock pickers as a group seem to have sold the stock heavily in the first half of this year, leaving more of the shares in the hands of index funds. This might help explain the stock's recent strength on better-than-expected sales of the new iPhone 7. As the shares began to perk up, many fund managers felt the need to get more exposure to the market's biggest name. None of this offers a clear outlook for the stock. If Apple were to approach the high end of its 5-year valuation range based on forecast earnings for the next year, the stock would rise from $114 toward its former peak around $130 a share. Yet the best bet might be for Apple's performance to remain streaky. That could mean its recent rally was just another passing phase of popularity for a widely watched stock that just can't seem to fit in. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.